I'm William Grantham with IchimokuWeather.com, and this is a deep analysis of the Nifty 50, a benchmark Indian stock market index that represents the weighted average of 50 of the largest Indian companies listed on the National Stock Exchange. We start off by looking at a weekly chart, and we can see that in 2018, market action was rising above the cloud, found support at the bottom, and continued to move up, though not greatly, and thus you can see a small cloud. If market action was moving up quickly, you would see a bigger, thicker cloud. Market action bounces off the cloud here, comes up, and is rounding the top at 2020, and that's when we have the COVID pandemic, and that caused a market crash around the world here in March. Market action then did bottom out before moving up and crossing above the blue line, crossing above the red line, and then moving up above the black line. The black line is our 200 period simple moving average. I find that the 200 period simple moving average works very well with the Ichimoku Kinko-Yo indicator system. Now, as market action has continued to move up, it's caused the blue line to move above the red line, creating a blue-red channel that is bullish. Market action rides the blue line. We can see how market action is floating above the blue line. We call this riding the blue line. And then it comes up and it crosses through the cloud right here at a thin point. It is easier for market action to cross through thin clouds than it is thicker clouds. We do have a bit of a consolidation as we go underneath the blue line, and then we continue to ride the blue line. Market action comes up, rides the blue line up, has a bit of a rounding top pattern. Then we have a big red week with market action crossing below the blue line before opening again below it, and then right now closing above the blue line. The market action coming up and then coming back down a little bit is a bit of consolidation, and that has caused the red line to go flat. The red line is created by using a calculation that looks back over the last 26 periods and looks for the highest high and the lowest low and then divides that by 2. If there's not a new higher high, then the line goes flat, and thus it shows us where there's consolidation. Now, this flat line also is a line or an area of support. So we're going to put a line in to show us this area of support, and now we can see if market action comes down, it might find support at this line. Now, back a little bit in time, we do have a little plateau of a red line here, which is another area of support. So we'll put another line in here. Looking back, we can see the cloud here, and the top of the cloud itself is also an area of support. Even though it was back here in the past, in the future, it can also provide us the same kind of support because we're taking old market action and using that to predict where we could possibly have new market action in the future. So now we have a line here with the top of the cloud and a line here with the red flat plateaued area, and this shows us a zone of support down below. Anytime you have a single line on a chart, you should never think it as a perfect area of support. You should always think of it as zone of support, and that's what we're showing here is the zone of support down below. Our lines are showing horizontal areas of support. The cloud itself is also a support area. It's a vertical at the moment, showing us a vertical area of support for if market action were to come down this far, then the cloud itself could provide support, and we might see market action bounce off the cloud. Now let's take a look at the daily, and we'll bring these lines with us. Now we can see the zone of support down below, and we can see our single line here, which we also should think of as a zone. In fact, on the cloud right here, you can see a flat line, and that indicates a support area as well. So that shows how this line is a zone of support that is down below our current market action. In September, market action consolidated a little bit before falling into the cloud, finding support at the 200 period simple moving average before going into a consolidation area again. Now, notice that this is right where we've drawn our lines. Market action comes in and finds resistance at the top of this zone and then finds support at the bottom. Quite a few times it's finding resistance and finding support, giving us more confidence in the support here in the future. Market action then finds support at the red line, moves above the blue line, and we see market action again riding the blue line up. We opened up a channel right here where we have the blue line going above the red line, and that is a bullish signal. Market action then finds resistance at the line here for 3 days before popping above it, coming down and finding support on the close, and then for several more days finding support right at this line. And finally, it continues its upward movement where it does eventually get back above the blue line, and then it floats above the blue line, riding above the blue line, which we all know is a move of momentum for market action. We then have a big red candle that comes through the support of the blue all the way down and finds support at the red line before closing right in the center of our channel. We open the next day a little bit higher, and then we trade down low into the red line, find support, and then close up at the top of the resistance of the blue line. The day after that, we open directly above the blue line, find it as support, and then we continue riding the blue line up. Market action then starts to stall a little bit, comes down, and as soon as it touches the blue line, we need to pay attention. When it crosses below the blue line, we really need to pay attention. This time it was a warning signal of what was going to happen a few days ahead. Market action then continued up, was not able to continue its movement, and then comes down and crosses below the blue line again, opens above the blue line, closes below. This time we've had 2 days below the blue line, another signal of bearishness, and then we have another day where we opened directly underneath the blue line at resistance, and then we find support at the red line. But then the day after that, we open underneath the red line. But take a look at this. It's actually a doji. That means that the bulls and the bears were fighting it out. They opened and closed at approximately the same price, creating this nice thin candle. That's a doji, and that is an indication of the bulls and the bears being in a stalemate. The bulls open it up higher the next day, but the bears pull it down throughout the day, closing below the doji. The day after that, the bulls get control, opening it up a little bit higher, and then actually being able to drive it up above the red line, above the blue line, and closing above both. So this is where we sit at the close of market today. We are above both the blue line and the red line. If market action continues to go up, we will see a separation of the blue line and the red line, creating a new bullish channel. If market action trades down below the blue line and the red line, we'll have to wait and see if the cloud itself will provide support. Taking a look at our lagging green line, it's 26 periods in the past, and it can find support and resistance at the same areas as our current price. In addition, the lagging green line can also be an anchor on price if it gets marred up inside of past market action. So if we consolidate and go sideways for a little bit, then we might see the green line. Here we're looking at its cone of possibility. We see that it could move inside old market action, and that could create an anchor on current market action, giving it more resistance from being able to continue higher. Our future cloud is starting to have a rounded top, getting a little bit thinner at the end, although it is still a big, thick cloud, and it could provide a large area, a large zone of support for market action if price comes down and challenges the top of the cloud. Now let's take a look at some other areas of support that we find on this chart. Looking back on the red line, we do have a flat area right here, so we could project this forward as an area of support. Right above it, we do have a blue line that has gone flat. That could be projected forward and be another area of support. So now we have another zone of support inside the cloud. So not only is the cloud itself support, but we have this zone of support that is inside the cloud, giving us double confidence of the possibility of market action bouncing off of this area and continuing to go up. Now above us, the blue line has gone flat here, and that could provide resistance above us. So now we have an area of resistance above us with support below, and this is our lines in the sand for market action to tell us if this is going to be a bullish market or if it's going to be a bearish market. If market action comes down and trades through the cloud, then trades through both of these lines of support, then we do have a bearish market on hand. If market action can get above the blue line, then we do have a bullish market. Now let's take a look and see what market action looks like on a 60-minute chart. Here we are on a 60-minute chart. We can see the price action came up to the 200 period simple moving average, found it as resistance, got above it, found it as support. The market action came up and found resistance right at the cloud. So when market action continues on the next trading day, it'll be interesting to see if it can get above this cloud. Now, this is a thin portion of the cloud, so market action could get through it more easily than if we consolidate, go down, and try to get through the cloud down here where it's thicker. Directly underneath market action, we have support at the 200 period moving average. Underneath that, we have a flat line here on the red line, giving us another zone of support. And then underneath it, we have both the red line and the blue line that will give us support as well. Now, the red line and the blue line have closed, making this bearish downward channel come to an end. If market action continues to go up, we'll see the blue line pull above the red line, creating a new bullish channel. If market action comes down and goes underneath the red and the blue line, then we could see the blue line go underneath the red line, creating a new bearish channel. So when the red line and the blue line separate, that's going to be a signal one direction or the other. So we're going to be watching this situation for this blue line and this red line to separate. That's going to be a major signal for us to be paying attention to. We can see the lagging green line has moved up through market action and is now a little bit above the blue line. It's in the middle of this bearish channel. We'll see if it can get above the red line, but we notice that the red line here is approximately the same area as what happens when market action gets up to the top of the cloud. So the top of the cloud has got two problems with us. We've got the top of the cloud here, and we've also got the red line here that are both going to provide us with resistance. Now, if we can get above the red line here on the green, get above the cloud here, we also have our blue line that is above us that's resistance as well. Back here, we have another top of the cloud, which will give us another area, and thus we have a zone of resistance above us. So we're going to need to get above both the blue line and the red line here before we're going to be able to call this a bullish breakout to the upside. Our future cloud has been coming down, getting red and getting thick, but notice that it's now starting to get a little bit thinner because of the market action turning around and going back up. It does have some flat plateaued lines here at the top of the red cloud, and if we get above the cloud, those will be supports underneath us. If we stay underneath, they're going to be resistance above. I'm William Grantham with IchimokuWeather.com, and this is my deep analysis of the Nifty 50.